Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is Monday, July 8th, and Brent crude oil is trading a little bit soft this morning in the open in Asia, down by about a 0.5% at 86 and change. And we've got WTI at 82.70, American price there, having had some fairly robust performance last week. We saw the week close for July 4th weekend with the fourth week in a row of upward movement in the oil price since that sort of collapse, if you want to call it that, around the OPEC Plus meeting in early June, where we saw $10 come off the price. We've seen a very robust rebound since then. But once again, we seem to have hit our heads on what is around the $86, $87 mark. And the market seems to see that consistently as a ceiling rather than a launching pad for higher. Omar Najia, Global Head of Derivatives at BB Energy. Your thoughts, Omar, on that sort of consistent challenge to break out from this point? And are there technical resistance in the market structure that is holding this back from the next step forward?
Yeah, I think basically if you look at the market and if you look at WTI as opposed to Brent, if you look at October 2023, and you can look at the high that it set just about there, September, maybe end of September, early October, it set a high. And then basically we had a series of three peaks. So that peak, another peak in about April, and another peak just now on Friday. And you could draw a straight line. Now, straight lines are always, interesting because a lot of people look at kind of resistance like that because it's nice and simple. So if we break that, I think the market's gonna run. So if you want to look at it a bit more nuanced, I think we've set a low at that 67.70, call it. We moved up 67 to 87, and we've moved down from 87 to 72. And this move from 72 to 84 is the start of a very big move to the upside. I think we'll see triple digits before the end of this year. We are bullish technically, and not just for oil, but for exogenous markets as well, meaning bullish for the S&P, bullish for precious metals. And when you look at all this stuff and you're bullish for pretty much everything, except the US dollar, it means basically that there's an overarching kind of narrative. And that, I think, basically is inflation. It's quite funny how everybody or the mainstream media keeps saying that inflation is coming down and the ECA inflation is coming down and the inflation is coming down. And we see it the other way. We don't see inflation as coming down. We see a real risk that inflation is not only going to go up, but actually accelerate. And again, it depends how you want to measure inflation. If you want to measure inflation in terms of food prices, in terms of energy prices, in terms of what you pay for schooling, all that kind of stuff, then it's skyrocketing. But if you want to pick and choose and say inflation is only the price of, I don't know, pick an arbitrary thing, then yeah, you can make that. Yeah, you can make that look whatever you want it to look like. But I think basically everything feels to us to be in an acceleration phase to the upside. Everything geopolitically seems to be chaotic. Look at the US, look at the people that you have running in the US, look at European elections, look at the UK elections. Everything seems to be in flux. And when you get that, you rarely get basically, deflation and prices. No, you get basically the opposite. Social mood is bubbling. And I think basically we see that in markets. We see that in markets and we see that inflation higher.
I was reading over the weekend some research on inflation, and one of the stats that stood out to me was that if the same measurement on CPI was used from the 1980s, currently inflation would be 18%. With the same things in the basket as was used in that time. Amina Bakr, Senior Research Analyst at Energy Intelligence. One of the big question marks a month coming out from the OPEC Plus meeting, Amina, is inevitably, and as we get closer to the date, Will they or won't they proceed with their increases in production? The grade 8 producers within OPEC Plus that have announced plans to raise oil production from October 1st. Are we in the zone of the criteria where that will proceed, in your opinion?
Well, I think right now, Sean, the price is encouraging. I mean, we are moving in that direction where a lot of countries feel comfortable to bring back supply. And on the back of that, they are seeing demand improve as they've predicted during the second half of the year is usually when you have a pickup in demand. So if prices continue to stay strong in this high 80s level, this will give them a higher level of comfort in bringing back supply by the end of the third quarter. Just also a few things ahead of that. By the end of June, the OPEC Secretariat had finalized the plan for the compensation cuts for Iraq, Russia, and Kazakhstan. And just a reminder, Sean, those volumes are going to impact how much additional supply comes into the market. So for this year, for example, we have increments of around 180 or 200,000 barrels a day coming in increments by the end of the third quarter. So that 180 or that 200 might be a lot less because of the compensation cuts. And what we're seeing so far is that all members are being very compliant. They've seen what would happen if the compliance starts to lag and its impact on prices. So I expect compliance to remain strong, but the risk is also when you have a very strong oil price or high oil price, it's tempting for some of the members to start, increasing their supply a little bit. But I think with the mechanism in hand and the plan to return volumes, this will discourage the producers for leaking additional supply ahead of that.
Walter Simpson, Managing Director at CCED in Oman, an independent oil producer there. Walter, your thoughts just picking up on some of those comments from Amina. It strikes me that when you sort of sparse all the pieces, that an official announcement to proceed with production increases in October may not be as spectacular as it stands, given that most are already producing near capacity bar one or two members. Your thoughts on how big a step that would be at this point?
Well, I'm with Amina. I don't think it's going to be a huge dramatic change to the market, to be honest with you. I think it will be limited in its impact because exactly as you say, most people are flat out as it is, or there's compensation mechanisms working in there. So yeah, I'm not expecting a huge change when it comes in.
And Walter, just to follow, when you take that framework then in the current state of we're seeing a fairly healthy $86 on Brent, where do you see the main pillars or the main sort of building blocks for that oil price? Is it fundamentals? Do you think it's inflated again with geopolitical risk? Where do you see the sort of the floorboards of that oil price?
All of the above, I think. Look, we saw that, today's slight weakness was around, is there a ceasefire going to happen? You've got the election season in full swing. I'm not sure the results in the UK have really secured the markets. Clearly, with their energy policy, it makes oil and gas really hard in the UK. The right wing's not quite made it as they thought they might in France. But I think, to go to Omar's point, there's still uncertainty all over the place. And I think that's going to feed into what happens to oil prices. So I'm afraid I'd sit on the slightly bullish side. And I think prices are going to at least stay where they are and maybe increase.
Omar, just coming back to that point, I mean, we are in the third quarter, the typically sort of more demand robust quarter, but also we've sort of now got to the other side of the major elections for the third quarter. The Indian election has passed, and the center right has has more or less won there. In Europe, after all the traumas and headaches, it looks like the center left has held there. Have we passed through the geopolitical risk premium high water mark for the third quarter, do you think?
In a word, definitely not. Now, I don't know if you or anybody saw the Trump-Biden debate. Now, if you've seen that and you've seen, all the stuff that they've been saying that, Biden should step down. No, he's not going to step down. Yes, he might have to step down. Yes, no. Maybe it'll be Kamala, maybe it'll be somebody else, Newsom, I don't know what, blah blah blah. So there's a lot of undercurrent there. I think basically all the stuff to do with Europe and the
But
UK,
that's not
in a
going to
word,
deliver. That's not going to deliver any risk to oil supplies. I mean, it'd certainly be dramatic political gamesmanship over the coming weeks and months if indeed they do get rid of Biden. But ultimately, for the oil markets, there's not really an inflation from that source, is there? I mean, do you see that as a potential?
what we see is basically inflationary pressures to do with, getting money to run the election, to do all the stuff that they need to do. So I think basically the American election is going to be more important geopolitically than what happens or what happened in Europe. But I think people underestimate the risks of having basically a president. So if Biden, let's say Biden now says, I'm pulling out of the race, he can't really pull out of the race and stay as president. He'd have to resign, which means you get Kamala Harris with like 3-4 months of whatever. You get Kamala Harris with whatever. If I was Israel, I'd invade southern Lebanon. If I invade southern Lebanon, Hezbollah might start firing at whatever. You get, a bigger conflagration. You get Iran. You get the Houthi. It's to me. I think basically that's the geopolitical side is definitely bullish. If then you compare oil prices to pretty much anything, to whatever it is you want to compare them to, something other than the US dollar, they're cheap, and they're incredibly cheap. They are really, really, really cheap. The BRICS over the weekend were saying that they're going to do a new financial system, etc., etc., etc. They have all the oil. BRICS have all the oil. The Americans have, substantial whatever, but not enough for them, even, let alone, the rest of the planet. So just looking at things from an overview, it seems to me if you want to take a strategic decision, I'd basically call it $90 Brent. Am I going to short $90 Brent, this year, next year, whatever it is? I think it's completely the wrong thing to do. I'd be on the other side of that trade big time. And I still think that the market is short. So I think positioning is short. I don't think you've seen the extent of short covering that you will see, nor the entry of longs into this market. So I think basically we're in a kind of calm, kind of disbelief, maybe we stay where we are, we go into nothing's really going to happen, because everybody's hoping that nothing's really going to happen, that we get a smooth election and everything will be fine and there won't be any escalation anywhere, no major surprises and that kind of stuff. So we think that the world is primed to go in the other direction. We're seeing massive changes in terms of, who's leading the world, the emergence of BRICS, all that kind of stuff. So
well, there's certainly no shortage of things to look at, but in terms of the window of the current frame of time, the third quarter, the high water mark, how high can we go in the third quarter seems to be the critical question, because this is both the peak demand period and we've had this massive amount of elections. But Amina, it seems to me that, again, I'm coming back to the high water mark, big election result in Iran over the weekend, the reformists coming in with the win there, a very serious indication, potential outlook for the Iranian political future. We had the Saudi foreign minister making some profound remarks over the weekend, sort of pointing to Europe and saying, where's your direction of travel now that your elections are over? Are you going to start coming to the table and using your muscle to bring some settlement to the Middle East equation? Your thoughts on that geopolitical risk premium looking out for the rest of the third quarter?
It's definitely still a risk, Sean, and I agree with Omar. We haven't seen the end of it, and things are still very uncertain. I mean, we're still dealing with conflicts that are ongoing. Gaza is still ongoing. The conflict in Ukraine and Russia is still ongoing. So we haven't resolved any of these conflicts yet. So the risks of supply disruption remains. We haven't seen any of that yet. And I know the market at many times, when you have even a very according to at least our assessments, a very high level of risk, they've brushed it off because we haven't seen any kind of physical shortage of supply, but that risk remains. And I think it's still a big factor. It's kind of in the background for OPEC plus decision makers, but it is one of the drivers they do consider when they do set policy. And that's why we're seeing this very, very cautious approach. Even when they're returning supply, it's done in a very gradual way, not to cause any disruptions to the market. And because of this high level of uncertainty, despite the fact that they do think, I mean, OPEC, the Secretariat didn't change its demand forecast for the second half. They still have that very bullish number of 2.2. Personally, I think they are going to have to revise it at some point, but they're sticking to it for the time being. But because of that uncertainty and because of those geopolitical factors that you expected, I do see them taking a cautious approach to things.
Walter, looking at where there could be a spoiler in this party, so to speak, from a producer, OPEC plus producer point of view, U.S. oil production last year was, of course, a major contributor to new supply, and with over 1 million barrels added there. But it looks like it's plateaued. And again, the Baker Hughes rig count is flat last week at 479 rigs, unchanged, and that is the lowest in nearly 3 years. Clearly no supply coming from the additional supply as of yet coming from the US this year. Your thoughts on the outlook for supply outside of the OPEC plus to come in to disrupt the outlook for the planned increases in the second half?
Can't see it, to be honest with you. Can't see it coming from anywhere. Really, it's with OPEC plus to decide what they do with their excess capacity. And I don't see any of the other non-OPEC plus countries having any extra capacity of significance that's going to come in and change anything, to be honest.
And what about in that, inside that box, so to speak, a low level of rigs operating in the US? Where is there, or is there any stress in the supply chain? Is it hard to get a rig? Is it hard to get crews? Is it hard to get the equipment needed to develop and expand production capacity? It was some time ago. What does that look like now? I mean, at $80, you'd think you'd be putting money in the ground.
It's still hard, if I'm honest. It's slightly eased. You can get a rig now, but it's not straightforward at all. And they're not seeing any reduction in rates. There's still challenges around the supply chain. So no, there's still competition for them. Yeah, you'd think at these kind of oil prices there would be more investment, but the uncertainty still goes with it. So we need long-term stability for really getting that money invested into the oil and gas business. And governments in the West aren't helping. In Europe and particularly in the UK at the moment, who would invest? Why would you invest in the oil and gas business there right now? It's just not worth it.
Let's go to the survey question, which comes back to my earlier point, or my earlier question, that we have indeed reached the geopolitical risk premium high water mark for Q3. With election results from Iran to France behind us, with victories for the center, we passed through the geopolitical risk premium high water mark for Q3. We saw obviously in Q2 that very high water mark of the Iran-Israel face-off, where we saw oil Brent above 90. It has come off significantly since then, but it's climbing back with uncertainties, as Omar mentioned. Israel and Hezbollah have been facing off on the border of Lebanon for some time now. That seems to have been heating up. But now with the new Iranian president, reformist coming in, could he diffuse that? So the question ultimately, have we passed through the geopolitical risk premium high watermark for Q3? Yes or no? Omar Najia, even you, I know, will be going on holidays at some point. This is our last week at the podcast before we break for the summer. But my question's a little bit larger than you and me. Ultimately, as traders and as the industry does turn its computers off for a bit of a window of break coming with the annual season, what impact could that have on the trajectory of travel through the third quarter?
I mean, if you're saying what's going to happen right now, I think we get a correction lower, and then basically I think that's going to be a massive buying opportunity, and we're going to use it as such. But I think the thing to kind of understand is that with all these elections in Europe, nothing's going to change. Absolutely nothing. With the election in the US, nothing is going to change. Absolutely. It's the uniparty in the US and in Europe. Nothing's going to change. With the Iranian guy getting elected, nothing's going to change because there's a fundamental issue between Iran and the West, and no election, doesn't matter if Trump's in power or Biden's in power or whoever it is, it's there's going to be the same policy that goes back to, decades basically. So you can forget about it. Simply because APEC owns the USA and APEC unfortunately now owns the UK. So it's that simple. So anything to do with geopolitics is just, in our view, going to get worse, because it doesn't matter who you elect, the policies themselves, strategically, nothing changes. You might get a guy wearing a different mask and all this kind of stuff, and I love Israel more than you, and you love Israel less, but strategically, nothing's going to change. So we would caution against believing that these kind of elections somehow have sorted out anything, including Ukraine. It doesn't matter if the Democrats, if the Republicans, doesn't matter. They are going to keep putting money into Ukraine because Ukraine is existential for the West and for NATO and for the global financial markets, as are the BRICS, as is Gaza, as is the Red Sea, Iran, Houthis, the Yemen. So what you're seeing, I think, is not all these kinds of different kind of things happening across the globe, but one thing, which is a change in kind of leadership between what we've had for the last 400-500 years, which was the West and Western models and Western financial system, and the emergence of what people call the global South, the rest of the planet, that basically are going to, put all that, and push it away, including the ICC, the World Bank, the IMF, the IEA and EIA, and all that kind of stuff. That's all, and the US dollar.
Just from this, when you add that all together, what you said, your own position would be that in going into a holiday season, if you like, the only option for a trader is to go long. You can't short this market going into the holiday season. Would that
I believe so. I believe if you see the market now is coming off a little bit. If you see it stay where it is now, let's say tomorrow around 82, if not lower, I think we have a good chance of maybe doing like $2-3 lower. When we get there, you'll have a lot of people start to say, this is bearish and it's gonna die and all this kind of stuff. And I think that is going to be the time that you buy this market for an absolutely stupendous rise. If this market can take out 84.50 on WTI and stay there, I think it's going to rally massively. And I am looking for triple digit Brent, WTI, whatever you want, between now and the end of the year.
Amina, one of the things I've been sort of struggling with get a sense of, where are inventories at the moment, the global inventories, the ones that the OPEC Plus look very closely at. How do they have to move, if you like, for order for OPEC Plus to continue, sort of proceed with its increases, however mild that might be in the fourth quarter? They are planning over 12 months to increase quotas at least by 2 million barrels a day, starting in October 1st. Where does inventories need to be? How do they factor into their thinking at the moment?
The benchmark has always been the 5-year average, Sean. I think they still look at that, but they look at it more loosely. I mean, we've seen a strength in the oil price just based on the fact that inventories in the US have been declining, and based on that, the oil price rose. So yes, they do keep an eye on inventory levels, and there's been a kind of frustration within OPEC because previous to that, I mean, we did see that fundamentals didn't reflect very accurately in the price. And they were saying that negative sentiment is kind of overwhelming traders and everyone else, and that's why it brought down the price, despite even, I mean, the day of the decision, as you saw, when they announced that big plan, perhaps it was difficult for the market to digest that day, but it was a signal that the market was going to get tighter. And what happens usually, just the last couple of OPEC meetings, when they do announce this kind of bullish policy, it takes some time for fundamentals to catch up with the price. And that's what we're seeing now. This tightening is starting to catch up with the market. The market is starting to realize how tight things are, how inventory levels are dropping, and that's reflecting in the price. And I think that's kind of satisfaction for OPEC producers to see that their policy is having the impact they want on the oil market.
When you just take that point, I mean, obviously looking a month after that OPEC Plus meeting, in the aftermath when we saw the oil price drop, OPEC Plus and its leaders were quite upset, quite cross even in some of their public statements at the general commentariat, if you like, and investment banks pointed out for misbehaving and so forth. Where is that dynamic now, do you think?
Well, I think that communication between the two parties really needs to improve. We're still seeing that kind of level of, I mean, between OPEC and the IEA, that dynamic of tension does still exist. The consumer-producer dynamic, I mean, that's not something that's been resolved, and that's something that I think it will only improve by better communication. And I mean, it's to the advantage of both parties really to start talking more, sharing more, because it's, I mean, to the general public, it's confusing when you see numbers with very large discrepancies, and it's just a matter of time, Sean. I mean, just we're on nearly, I mean, 6 months till the end of the year. Let's find out how much demand grows, who's more accurate, OPEC's statistics versus the IEA's. So it's just a matter of time till we see what reality brings in. Just another milestone that's coming up, Sean, is the 1st of August, where OPEC Plus is supposed to have their JMMC meeting, and that's when they're going to be reviewing the market conditions, and we'll get a better indicator of the plan to bring back supply into the market.
Walter, the other main sort of, well, one of the main pillars of the oil market on any given year, of course, is China demand, China imports, and particularly for Oman, where you are operating, is China market is a massive part of your destination. What are the signals like there looking out? Of course, we're now trading and delivering into the fourth quarter already by the time with the contracts and delivery dates. Your thoughts on where China's at now in the second half of the year as terms of it being a critical demand center for Middle East oil?
All I can say, prices and demand are robust. No real change is the honest answer. So yeah, not much more I can add than that. Look, I think we're going to see more of the uncertainty going forward. You know, this uncertainty around how much demand will increase, the uncertainty around what reaction on supply that will bring, the uncertainty around the geopolitical situation. I think we're just going to see more of the same through the back half of the year, and generally that will encourage prices to stay up, would be my expectation.
And with it, it would appear a continuous appetite within the Gulf region, at least, to keep adding production capacity as we look across to the US flat, that across the region, obviously the most sort of famous headline would be the Abu Dhabi, UAE, 5 million barrel a day target, but everybody is on some pathway to adding capacity, and that looks like continuing regardless.
Yes, I think it does, but you know, we'll see when they meet on the 1st of August. They've all said that, you know, this can be wound down if we don't see the demand we expect. I think that will be hard, but again, OPEC Plus has survived so far by actually reacting to the changes.
On that technical point, Walter, I mean, with those increases announced already for October, and they're very in micro detail, incrementally each month, how much each country, and so the planning for that would be underway already, right? We talked earlier, getting a rig, getting the infrastructure and supply chain you need in place to add that kind of capacity. You can't just turn those things on and off, right? Those things the train would be left to station to a certain extent on some of that for October at least.
I would think so, yes. So it's hard, as I said, it's not straightforward to do it. But again, if there's the political will and the agreement to make these things happen, they can happen. Sure. And they've managed to do that in the past. So while I'm not saying it's straightforward and it's easy and you just press a button and it's done, certainly, you know, there's a lot being invested in maintaining the oil price up where it is. And I don't see OPEC Plus throwing that away easily.
Well, we're going to have to leave it there as we wrap up. We get the survey result. No is the big answer in this room, at least. A big fat no. Go away, Sean. You're pulling us out of the air there. Have we passed through the geopolitical risk premium high water mark? Perhaps I'm coming out of the weekend feeling a little bit positive, and that the geopolitical risk, to the extent in which it was challenging, and my parents-in-law trying to get out of Lebanon for the summer and so forth, and maybe there's there's a positive vibe. Seeing the election results in Iran and France were at least reassuring for the center, which I think is critical for some geopolitical movements as well as their own national movements. But high water mark and geopolitical risk premium, I'm gonna hang my hat on that one. Thank you guys so much. As always, great to have your contributions. This is indeed the last week ahead of our break. So even for Omar Najia, the great Monday quarterback, thank you so much for all your contributions this season. Amina Bakr, the best in the business on OPEC Plus. Everybody knows it and sees it all the time. Thank you so much. And Walter Simpson in Oman, thank you for all of your contributions through the season. Have a great summer break, all of you. I look forward to seeing you all in the September restart. Thank you guys. All the best.
Thank
Thanks,
you.
Thank you,
Sean. Bye-bye.
Sean. Take care.
Bye-bye.
Bye.